Akash, fantastic to have you back. Lovely setting here. I always love coming to Singapore.
It's a nice place.
What's the mood like?
And the mood on emerging markets is obviously challenged at the moment, in the sense that the asset class has done very poorly. People are very worried about China. People are very worried about Brazil. The strong dollar, weak commodity is well known. So I think the emerging market asset class is challenged. Within that, I think India people are more positive, obviously, which shows in the ownership. I mean, I've been saying for some time that India is a favorite market right now, over-owned to a certain extent in terms of relative weightages. So I think people still see India as a safe haven within a very tough and turbulent emerging market world and environment. But I think India's weightages are so high among most emerging market funds now that if EM gets outflows, which is like what's happened in the last 1 month, which is why I think India also has been a little bit under pressure, people will have to sell India as well, because you can't keep raising India weight in your portfolio. If you have an outflow now, you're going to have to sell India along with everything else. So I think it's a race right now in a way that we have foreigners selling on a pretty much daily basis, as I've been saying for some time. But thankfully our domestic investor base has stepped up, and we're seeing significant inflows into mutual funds and insurance companies in India. So I think India is doing better than most, both on the rupee as well as markets. But it's a very tough environment for EM, I mean, emerging markets broadly.
The concerns for emerging markets broadly are three. Number one, crack in commodity prices, which is good news for us. Second concern is no large domestic drive or domestic consumption drive. And third, lack of policy action.
Yes.
Those concerns, which are the widespread concerns for emerging markets, are not the core concerns for India. So can we really stand out?
Well, you could argue that we're already standing out, right? I mean, if you look at, year to date, India's down, 8-9%. People like Brazil are down 25-30%. Other big markets are down a lot. So the fact that our weightages are already so high within emerging market portfolios indicates that we are standing out already. And that's why India is an all-time relative high weightage for investors compared to history. So I think that the problem in India, I think, is that this is well understood now. That, that the environment is actually supportive of India. So I think for us to have a next leg of movement up, it really is linked to corporate earnings now. I think the one disappointment in India has been the corporate earnings. Corporate earnings have been weaker than most people would have expected. There's still negative earning revisions. I think hopefully we're near the end of that. I think probably maybe another quarter of negative revisions, but after that it should stabilize, and hopefully, I still believe over the next 2 to 3 years, given where corporate profit margins are, they're at a 10-15 year low profit to GDP. That over the next 2 to 3 years, Indian profits should grow quite strongly, the listed entities, the market's earnings. But people, I think, want to see the proof, want to see evidence of that. I think people are not willing to have waited quite a long time now. It's already been 18 months, earnings have done nothing, right? I mean, earnings are actually negative. So I think for India to break out of this range on the way up, I think we'll need to see delivery on the earnings side.
I understand the historical averages, that earnings are below historical averages, they have to come back. It's the natural course correction.
Correct.
But earnings are not coming back. What is pegging us back?
Well, I think it's a combination of 2 things. I mean, one, of course, is that, that I think there is a lot of excess slack capacity in the system. So, companies don't have pricing power, right? If you have WPR -4 and core WPR -2, that obviously indicates there's no pricing power with companies, right? So I think one is that. So if you look at across sectors, white goods, cars, trucks, two-wheelers, record discounts, right? So there is no pricing power, number one. Number two, I think you also have a fact in India. I think that you have because of negative inflation or deflation in the wholesale side, you have top lines growing at 8-10%. So in India, there's a natural cost creep of 10-12% on the fixed cost side. I think just look at electricity, look at wages. I think that is a natural cost creep. So if you don't have revenue growth of at least 15%, I think you have negative operating leverage, which creates a problem of its own. Number two. Number three, I think, is when you see a big crack in commodities like you've seen today, the companies which are commodity producers take it straight on the chin, right? Immediately their earnings go down because their selling prices immediately collapsed. While companies which have the benefits of the falling input prices, it tends to take a longer. There's more of a lag of that coming through the P&L account. So partly also you're seeing a front end loaded negative, which is all the people producing commodities or having commodity inventories have taken the hit immediately, while the people who consume commodities, who will get the benefit of this, it's taking longer for that to reflect in either through the supply chain, or they have inventories, or they're taking, or they've not taken, or they've already dropped the prices, they're not taking it up, so stuff like that. So I think it's a combination of weak top line growth, the fact that the losses are front-end loaded among the commodity producers and you're not seeing the benefits yet, plus the fact that there's negative operating leverage and capacity utilization is much lower than people think. And the fourth, I would say, is that there's a lot of part of India which has also got too much debt. So it also affects, you have a negative investment cycle. Again, when you're in a strong investment cycle, it front loads profits, right? Because the person selling you the capital equipment, he books the profit straight away. And the person buying the capital equipment, it comes as a depreciation over 4 or 5 years. So if you have a very strong investment cycle, it normally front loads profits. If you have a negative investment, like we're having in India, where investment cycle is not growing at all, it's actually no growth at all, that again pushes profits out. So I think it's a combination of all these things.
But in terms of a taxation regime, this entire MAT issue, it's been brilliantly handled by the government, and also they've not destroyed the P-note structure. You come from a country where there are tax treaties in place, so you don't have to worry about taxation.
Correct.
But in general, this is great news for other overseas investors.
Yeah, I think so. I mean, I think that, there was some confusion initially, which was unfortunate. I think it should not have, the confusion should have been corrected earlier. But I think once the government recognized that this is creating confusion, I think they reacted pretty quickly. And I think it's now quite crystal clear. There's no impact at all. And I think they've handled that reasonably well. So I don't think among foreign investors now there's any doubt as to their tax position or so that problem has been solved, thankfully. And I think damage control has been done pretty quickly. So they've done a good job of controlling the fire. But I think the corporate tax issue still remains. I mean, if you talk to companies, I was at the Milken conference in the morning. Milken Asia Institute has a conference. So there are some companies there talking, and they still worry about predictability of tax. It could be just legacy that with the Western media has gone on so much about this Vodafone issue and Vedanta and Kane and all this, that there's still this perception in people's mind that we're not 100% sure that that all this stuff get resolved. I think the finance minister has gone on and on saying that, look, we will not, we will adjust this fairly, we will not do things which are negative. I think people still want to maybe see it more or give the government more, give it more time to make sure that there's nothing else funny happening. I think we had done unfortunately in the past, we had done such a negative perception job about India and the stability of our tax regime, that's going to take time for people to really fully believe that that the regime is actually stable. And I wish they had, they find a way to resolve this Vodafone and all this issue one way or the other once and for all, and just close the chapter, so that at least you can't be asked this question every time. What about Vodafone? What about Vodafone? I'm sure the finance minister himself is sick and tired of answering this question. So it should be resolved and closed. One way or the other. Either they have to pay and finish it and make them pay, or if they don't have to pay, close the case.
Benchmark indices on an average are down by about in rupee terms, not in dollar terms.
They're
down by about 10.
Minus 10 in
dollars.
Yeah,
and from the 52-week high, Nifty is off by about 15% in real terms. Are markets looking cheap again? Are they looking attractive enough? I was looking at a Morgan Stanley report. They're making a case that Indian markets are no longer trading at a substantial premium to other emerging markets.
Yeah, I think markets are. I believe the markets don't have huge downside. I agree with that. I've said that, and I wrote an article also saying that don't panic and you shouldn't be selling at 7,500 Nifty and stuff like that. I genuinely believe that the Indian story is a pretty attractive story on a 2-3 year basis. There are lots of structural things happening. The economy will accelerate. Interest rates and inflation will come down. Corporate profits will improve with a percentage of GDP. So I firmly believe that bullish structure, long-term thesis is in place. I think we are hitting an air pocket right now, largely because of EM factors. Also, there is some concern, about domestic, because it's become a very difficult political environment. The GST bill was a disappointment. It's unfortunate. I think there seems to have been some lack of maturity on the part.
Is that a concern which could be a big overhang now? Because GST was in the price when we started this.
Yeah, I thought GST. I personally felt that GST would get through because I thought that the government, the Congress and the BJP would have come together and recognized that this is, the BJP had basically taken the Congress bill and I think had by and large agreed to most things that the Congress party wanted. So I was of the opinion that this would now get through because they would have agreed that, look, this makes sense. We listened to what you said, you incorporated most of what you said, and this is basically your bill. So you can't suddenly, why would you oppose something that you yourself
proposed? Yes.
It made no sense, makes no sense. So that is a disappointment, clearly. So I hope that does happen.
They are riding a great macro success story, but that has come not largely because of what they've done. That's largely because of crude and decline in commodity prices. The fiscal mass could be in disarray because they have to make commitments to the pension commitments now, and the bank recapitalization number has gone up from 9,000 crore to about 30,000 crore.
Correct. No, I think, have they been lucky? Yes. But luck favors the brave. So, it's unfair to say that, it's not that they designed the oil price to come down, right? It's something that they inherited, they benefited from. I think it's good that they've taken those benefits and have tried to ramp up fiscal expenditure on infrastructure, on roads, on railways and other things. So I think they've been reasonably responsible, and at least have not gone berserk on the subsidy side, and have by and large used the windfall gains to not be populist and try to boost real public investment, because the reality is the public investment is required because there is no private sector capacity to invest today or willingness, and you need public investment to crowd in private investment. So have they been lucky? Yes. But have they been foolish with the windfall gains? No. I mean, they could, for example, have kept cutting diesel and petrol prices and said, let's give the windfall to the public. If I'm going to argue, maybe they could have said we'll massively ramp up Narega, for example, or we'll massively do something else on I mean, they could have used the windfall profits for suboptimal things.
Schemes.
For schemes. I think recapping the PSU banks, I mean, I can't criticize that. I've been arguing for that for the last 2 years, that you need to massively recap the PSU banks because there's a capital hole there. How will they lend if they don't have capital? Now, I can't say that on one hand and then say, why are you recapping the public sector banks? So I think they've by and large been sensible with the money, with the windfall gains they've got. They've not been obsessed with saying, they could have said, for example, we'll go to 3% fiscal deficit 1 year early. They could have done that with the gains. I think they've not done that. I think they've realized they need to step up public investment. On the one rank, one pension, frankly, that's a political decision. I'm not party. I don't fully understand the arithmetic there. It looks like it was an electoral commitment made, and it looked like there was a genuine on the ground type of protest that this has to be delivered. So if they have to do it, then probably do it now when you have the money.
So according to you, the bull market is not over. This is a bull market correction. It is looking very ugly on the paper. It could be 10-12% for indices, 25-30% for mid-cap stocks. But from a 2-year time frame, 3-year time frame, this is time to put money to work.
I think so. I think that you should be sensible on pricing. I mean, I think that there was a bit of a overvaluation zone in mid-cap specifically. A lot of mid-caps, I think, had gone to really high valuations. And that's correcting, which I think is a good thing. But I firmly believe that, as you said, and as I wrote, that this is a pause which refreshes. This is not the end of the bull market, in my opinion. This is a pause which every healthy bull market needs. The froth has been knocked off, which is a positive. People are less complacent, which is also good. And I think that unless you fundamentally, I said our thinking is based on 3 pillars, right, or 4 pillars, right? One is that we think economic growth will accelerate in the next 2 to 3 years. We're growing at 7.5% now. It'll be over 8%. We do believe that inflation and interest rates are structurally coming down by 150 to 200 basis points further. So if Mr. Rajan has to deliver 4% inflation in 2 years' time, that means he's going to have a repo rate of 5.5. It's 7.25 today. So there's at least almost 200 basis points of interest rate reduction, which is possible. So that's the second leg of our economic growth accelerating, interest rates and inflation coming down, which is very positive for PE multiples and financial assets. The third leg of the bull case is, as I said, the corporate profits are too low. So regression to the mean, they should get back to a long-term average, which is dramatically higher than today. And the fourth, I think, is that there will be there is a long-term secular asset allocation shift away from physical assets like gold and property into financial assets, which is visible. Which I think we're early stages of that move, and that will give you a constant bid in India to financial assets, because the domestics will keep coming in.
So given an option to, let's say, address one issue where you would like to seek clarity as an investor, what is that thorn? What is that thing you would like to seek clarity?
There's no one specific issue. I think that, my view is that what they're doing is right, which is that they are ramping up public investment because they recognize that the private sector is either unwilling or unable to invest, right? So I think this is a long-term process. It's going to take time. Government spending, the first signs of increased government spending are visible. Roads and rail are 2 obvious examples. I think they've got to keep pushing on that. And over time, the confidence of private sector will come back.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.